All right. Hello, everyone. Welcome to episode 69 of Going Live with Good Soil Investment Management. Matt and I here again, both on our YouTube Live Good Soil Investment Twitter channel. YouTube channel and our Twitter spaces here. We've been doing both together at the same time for a while now, and Matt and I were just chuckling about how nice it's going to be when Elon takes over Twitter and revamps it and evolves Twitter Spaces to be more like a YouTube content creation competitor. And then eventually, I'm sure there'll be more, synchronous or harmonizing ways to sync your YouTube live stream with Twitter's live stream in the meantime. But at some point, it'll probably, maybe if he's successful, we'll just do everything on Twitter one day. Who knows? That'd be cool. But yeah, I was telling Matt last night, me and Dave Lee and I had a little Twitter thread, then Steve Mark Ryan jumped in, and then Elon responded with a wink. But we were basically talking about how Twitter Spaces can evolve to kind of eclipse content creation that YouTube does now, if they can add video in there and make it a nice platform, easy to use. All the content creators, instead of having to be at their desk with a computer for YouTube, for example, they can just do it from their new iPhone or their phones or iPhones. They can create good quality video and content from their iPhones with some of these new iPhone technologies coming out in the newer versions that Dave Lee brought up initially on the thread. So yeah, Matt, I'm surprised you didn't see that, because the first thing I do when I wake up in the morning on Twitter, the first news, not the first thing I do, but the first outside contact with the outside world in terms of looking at news or whatever, is I pull open Twitter, but then I search Elon Musk, and I search for all his tweets and replies, because I want to see what he's replying to. So I don't know. It's a habit I've gotten into. I'm surprised not more people do that.
So I usually do that. Today I had a little bit more stuff going on than normal, and it just got off to a slow start too. My fire alarm went off at like 4 a.m, and so all the kids woke up, and it was just like a nightmare. So we're kind of dealing with the aftermath of that, and then I was doing some prep stuff and just trying to get through a bunch of emails that I'm backlogged in. So a little bit more drinking from the fire hose than usual this morning. So that's probably why I didn't see that.
Oh yeah. Light family. Yeah, I miss up. Sometimes I miss it if things get hectic in the morning. Yeah, it disrupts your routine or whatever. It's normal with lots of kids, and you have 6 kids. I can't believe it still. So, so anyway, episode 69. Here we are. Special number, I guess. So the macro market. That's what we start with technically, usually, and the stock market is up today. It's nice to be on an up day talking versus a down day like we usually have been lately. But yeah, I guess the Fed changed their Bullard, I think it was, on Friday at some conference, talked about how they have to discuss the rate of increases to not like damage the economy or something. Trying to fight inflation. They have to kind of weigh the risk there or something. So I think it was the first like dovish statement by any of the Fed governors in a long time, and so I think the market sort of maybe exhaling on that. And the more important thing that should be more important is actually the earnings reports. And we'll talk about Tesla's earnings reports in a minute. We talk a lot about Tesla in a minute. But in terms of this week coming up, you got a lot of earnings reports coming out. You got Google, Apple. I think UPS and JP Morgan reported this morning positive, and some other companies reported positive earnings this morning, beating expectations. So you got a lot of Facebooks this week. You got a lot of big behemoth tech companies reporting earnings. So normally in normal times, earnings reports drives the market, so let's see what happens this week. Do you think the market, if earnings reports are positive, you think the market's going to kind of get a jump start, Matt? Or do you think we're still...
It certainly seems that way. And in those comments from Bullard, I think it was like the first time we've heard that kind of potential tone change. But it was interesting. There was all this controversy last week about how all the Fed officials basically sold the top, and these comments from Bullard were at like a private, like invite only Wall Street event, like to a very select group of investors. So it's like that it's like the wrong message, I think, to be communicating that sort of thing privately to very connected investors. So I think that's rubbing a lot of people the wrong way. But in terms of earnings this week, like it seems the market's been hit so hard that I think if we do have a couple solid reports, like we saw this morning, that could spark the rally. But I'm hesitant to put too much stock into that, just because we've seen companies beat in recently, and the stock's fallen. Tesla, I
Yeah.
mean, it was a bit of a mixed report, honestly, with Tesla, and it got absolutely hammered, which I think was overdone. It's recovered quite a lot now, actually, from where it was last week. But I mean, yesterday even it was down to below 200 yesterday. So
Yeah.
I mean, it's up
Yeah.
over 10% from the low yesterday. That was
Yeah.
it just seems like it's been so overdone. So I think if we do get a couple solid reports, it wouldn't surprise me at all if that kind of sparks a broader rally.
Yeah, I hope so. I mean, I want fundamentals to drive the market, not speculation on interest rates in the future and such. I feel like, you have to, the interest rate equation is a big part of discounting present value. I understand that, but it just seems like it's gotten carried away with every comment, every tone of every Fed governor, every time they get a chance to speak, and the whole market reacts. And, it's like mass hysteria with, I don't know, it's not fun. So yeah, it'll be nice if we have some stability with the interest rate speculation and where it's going, where it's headed, or where it's at, and then we can just get back to fundamentals of companies. That's where I want to be. That's more fun having a market like that.
You want to put the fun
So
back into fundamentals.
yeah, I like that. That's a good tagline. We should create that tagline somewhere. So yeah, I mean the macro market, and then the other thing is China, right? China, President Xi had his Congress. They had the Congress ceremony every 5 years. They do this and reconfirmed him being premier for the next 5 years, I guess. And there was a change. And my understanding is there's like six people that I listened to The Economist, and I listened to the whole series actually of they called The Prince on The Economist. It's really good. It's like 7 part talking about President Xi's history. Anyway, I listened to The Economist talking about this more recent Congress reelection of President Xi, or renominate, whatever you call it. But there's like 6 very important people in the high ups party with him, and he's changed out like 4 of them to be like only loyalists now. So he has even more like strict power. There's no dissenting voices, no independent voices. It's like all his own loyalists on the top 6 people with him at the head of the CCP. So I guess the market in China didn't like that, and it was down, I think, 10% on Monday or something. And then last night I saw some headlines that China's state, the Chinese government was ordering state banks to buy stocks to prevent the decline. And the Chinese state media was like, there was no reporting of the massive like 10% drop the previous day in the state media. And like, it's just it's a different world over there. What are your thoughts about the Chinese macro conditions and market?
Yeah, I mean, it seems like there's some issues, and they're trying to make it look a little bit better than it is. I think one of the issues you touched on was Hu Jintao, who is one of the previous premiers, leaders of China. He was like escorted off stage at this at this event, and so
Yeah.
he's kind of kicked out, which it's like pretty unceremonious for someone who used to be in charge of the whole country. So yeah, that was certainly interesting. But
Now, do you
the
think he had
weirder,
like dementia and just like was refusing, like just forgot where he's supposed to be and showed up and like he's have his dementia? Like some speculations, maybe the guy was like 79 years old and has like the dementia and he's just like not knowing what he's doing. They have to like physically remove him. Or do you think that it was like a complete surprise, or he was protesting actively? Or I mean, have you read anything
so
about that?
I mean the thing I've seen from a lot of commentators who watch this space is that like these events are usually highly orchestrated. So like it seemed like something didn't quite go to script. So I don't know. It's
Mm,
it was highly unusual, I think. But in terms of what that means, um, yeah, like DRK says in the comments that was a power move by Xi. That could
mm,
be. I mean, but like he's got power. Like there's basically no
yeah,
one to challenge him anymore.
yeah.
So yeah, the weirdest thing I think though recently was the delay of the Q3 GDP numbers. That was just so strange, and like the sort of thing that just
Mm,
wouldn't happen in the United States. So
yeah.
I don't
And
know.
do you believe that? It was like 3.9% beating expectations, but whose expectations? And are these expectations expecting that press release by the Chinese state media to be real on this? I mean, there's a lot of speculation around that, right?
Yeah, it's kind of funny because like I mean we talk about all the commentary like from Elon and people like kind of market watchers in general is just that like China's got like a very serious. I don't know if it's technically a recession. I mean, technically it's not because the GDP is actually increasing,
Yeah.
Quarter over quarter and year over year. But it's like by all
Observations.
like subjective metrics, it looks like there's a pretty
Yeah.
massive slowdown going on in China right now. But then it's like, oh no, we're plus 3.9% GDP.
Yeah. Look
So
at our
I like
GDP print.
maybe that's true, but it just doesn't feel like it, So I don't know. I mean,
Yeah.
I think we've got a similar issue like in the United States to a much lesser degree, but like we've talked about the problems with the CPI as a metric,
Yeah.
but at least it's kind of like reported objectively. Like you don't really worry that anyone's kind of fudging the numbers or anything like that. It's just that the metrics themselves are not ideal.
Yeah.
So I don't know. It seems like we're kind of increasingly in a world where these economic metrics are being used for political purposes. And, I
Yeah.
don't know enough to say like definitively that China did monkey with anything, but it just doesn't smell right to me.
Yeah, it doesn't smell right. And it's funny. One of my favorite Twitter followers or authors and thinkers, modern day thinkers, is Nassim Taleb, and he has kind of famously mentioned how, like, even though people make fun of Great Britain, for example, switching prime ministers so frequently, that's actually a sign of a very strong and healthy democracy versus
Mhm.
like Russia or China, where you have like one guy in power for such a long time that can't be removed. That's kind of
Yeah.
like a much more fragile governmental system, subject to like a major blow up at some point versus a much stronger democracy, which has less friction of getting people in and out of power, with elections and whatnot. So, yeah, I mean, it was an interesting just thought that he put out there that I think of when I think of President Xi versus the U.S., for example, because he's going to be in power, it seems like, indefinitely. And I don't know if it doesn't seem like that's a good thing. It seems like investors overall are nervous about that. And the Chinese markets are suffering because of that. He can only prop up Chinese stocks so much with the state banks and such. I just don't know if I think eventually there's going to be some kind of like free market consequences. As much as they've tried to go on be like a mix of communism and capitalism, I feel like the markets part of capitalism are not going to work out so well for China in the long run with this type of power grab. So I guess we'll find out in the next decade or so. But it's certainly causing jitters in the Chinese stock markets, which may or may not be free markets at this point.
Yeah,
Yeah.
they're invest with caution, I would say.
Yeah, yeah. I mean, I was looking at there's that K Web or some Chinese ETF tech index that was down like 20%, like Pinduoduo and like Xiaopeng and Naomoto, all these like cool, great Chinese tech companies that normally I would be like, oh, they dropped 20%. Let me look at them. But now I'm thinking like I hear the bear side of it. And I'm like, there could be a case for that. These Chinese ADRs, you don't really own the company. You're owning some like receipt of it. And the Chinese, they could take it over and not pay you. There's lots of shadiness that Chinese, government can easily do to, it's not worth investing in Chinese ADRs for me at this point. I mean, it seems highly risky.
Yeah, we did do something of a semi deep dive on those ADRs, like 6 months, 12 months ago, something like that, because we were kind of looking at
Yeah.
them as a downside potential. And yeah, I agree. It's not like owning common stock, and it's not just Chinese risk either. Like we've seen with these like semiconductor industry, what President Biden's kind of just like stroke of a pen, and it like had these massive rippling effects on the semiconductor industry in China, with a lot
Hmm.
of like U.S. nationals being forced to leave,
Yeah.
which caused like very serious issues across the whole Chinese industry. And so, there's registration for the ADRs on the New York Stock Exchange, and so there's regulatory risk both ways in my mind.
Hmm. Yeah, absolutely. Um, So, and the ADRs are like shell companies of the Chinese. I don't know. There's like, I know the All In podcast they've covered. Shamath has covered a few times. I've heard people on Bloomberg News talk about it, and it just seems like you're not owning really a piece of the company if you're buying those Chinese ADRs. There's some risk potentially there. So anyway, tying this in actually to Tesla real quick, we're going to try to transition to Tesla is the Chinese demand pocket that we've seen, and now Tesla China lowered prices. Do you think, given how much respect Elon has for China, the government there and how they do things. I mean, you got to say, for all the negatives with China, the government on control. One thing I have learned is there's a lot of positives with what China has done, lifting like 400 million people literally out of poverty in the last like 10 or 20 years. There's so much
Hmm.
good they've done as a country. It's easily shadowed by these power grabs or whatever. So there's a lot of good overall with China, I'd say. And so I think the reason I'm saying that is like I think it's okay to respect China, and like Elon probably I think does. And um, do you think there's some kind of coincidence that even though everyone thought they should have lowered prices before, that they waited until after this fifth Congress, and like the new political roadmap was unveiled before Tesla China decided to lower prices to make it more affordable for the common person, the perception looking like that? Do you think there's some coincidence there?
Um, I, it would surprise me if it was actually directly related to that. I think given the fact that they want to, export more earlier in the quarter, even though they're getting rid of the, delivery wave, they're still going to export a lot in the first couple quarters or the first couple
Hmm.
months. So to me, it kind of makes sense that you've got, a couple free weeks where you can see how your order rate looks at the old pricing level, and just kind of, give consumers a chance to, you know, okay, it was expected on October 1st. Well, that didn't happen. But how does your order rate change? And, get a
Yeah.
couple more weeks of data points in there to say, okay, yeah, we really do need to lower prices. And it might give you an idea of how big of a price decrease you need to go at. Cause I think there's a risk of like lowering by 3% and then saying, oh shoot, that wasn't enough. We need to lower like another 3% or something like that. So it may just
Yeah.
be, wanting to get a little bit more time at the order book. I'm not sure what the political gain would be by, kind of waiting until this Congress was over, but I could be
Mhm.
wrong.
Yeah. I mean, either way, it seems interesting, the timing, that it could have easily happened at the end of last quarter to get that last 20,000 sold, I think. But um, they waited till coincidentally, like right after this this Congress ceremony, this in China, reconfirming President Xi and letting and also I think the second most important person in politics, according to the economist analysts, who study this and that I listen to, according to them, the second most important person in China politics right now, the person who came out behind President Xi on the red carpet, is the guy that I think the mayor or the governor of Shanghai, and that's where Tesla's factories are, right? And so
Mhm.
there's a strong correlation. I'm just like going on like what do you call it? Conspiracy theory thinking with Tesla here, thinking like maybe there's a reason they waited until right after the Congress, because they have such strong ties with Shanghai and they have to keep that, and President Xi and all of China's government, CCP, in order to have Tesla thrive there, that they wanted to look good, like, hey, we're lowering the price for the common, Chinese citizens here. We're trying to participate in your vision for the future, President Xi, and make it kind of like getting brownie points with them. So that's just my conspiracy thought of why the coincidental timing of it with that. Anyway, so what else with Tesla? Is Elon selling shares? I suspect he was selling shares yesterday, maybe some today. We'll find out Wednesday night. There's like the 2 business day reporting window. So we'll find out Wednesday night at the latest if he was selling on Monday. If he didn't sell Monday and he was selling today, we would find out probably Thursday night. And typically in the past, he's sold over like 3-day periods, maybe the most on the first day and a little bit more on the second, a little more on the third to get his accomplished. Maybe in this case, it's $3 billion or $5 billion worth of Tesla stock. I'm not sure. But if he is selling, it seems like to me, there was some volume spikes mid morning. That seems like what happened in the past when he was selling shares. What are your thoughts, Matt? Do you think he was selling?
Yeah, I suspect he probably. It's the deal is expected to close Friday. You don't want to, you don't want to like sell on Thursday for for a transaction that needs to fund on Friday. Like there's actual
Yeah.
settlement period. So like I
Yeah.
wouldn't expect he even sells tomorrow. Like because that's just too close to actually get the transaction settled and the funds transferred. So I think he'd want to have that. Um, Available as cash kind of sitting in the account by Wednesday, Thursday at the latest, so that there's no question about the funding. So I suspect today's probably the last day he possibly could sell. And I think that's just going to be good news. I'm excited for this week to be over, honestly.
Yeah, me too. I mean, a friend of mine asked like, "Oh, when should I buy?" A friend of mine wants to buy Tesla. Should he buy it now? And I'm like, maybe some now and some in a week." Just because you don't know if there's more selling going on this week and it's going to get lower. But the whole market's up today, including Tesla. So maybe that wasn't a good, friendly family. I don't give advice. We're not registered as advisors. Just telling a friend and a family member. Anyway, with Tesla, Elon selling shares, maybe or maybe not. We'll know in a couple days. Hopefully, it's the last time is to do that. And also with Tesla, the biggest thing is Q3 earnings came out. We talked about it last week before the earnings came out, and it's come out. It's sort of a mixed bag, like you said. That's how we thought about it. And long term, I'm very happy with it. But in terms of like gross margins and the profit, it was a little, I guess, gross margins. What was the most underwhelming, or what was the part that we had highest expectations on that were not met, would you say, Matt?
So I actually did like a little waterfall presentation of kind of
Yeah,
what's
let's
the
see it.
difference. So let me share my screen here.
Okay. For those of
So
you on Twitter Spaces, you can watch us on YouTube Live as well. We have a few hundred people on YouTube Live, but usually like 50 or 80 people on Twitter Spaces. So, all right. So let's go here. So this
all
is a
right.
waterfall.
So
Okay.
the waterfall. So we were forecasting $1.32 in earnings per share for Q3, and really the two almost by far the two biggest factors were the lower ASP. So average sale price actually decreased quarter over quarter.
And we thought it was going to
Um,
increase, right? We thought
we
it was
thought
going to
it
increase.
would increase, yeah. So that one's actually kind of puzzling to me because you had all
Yeah.
these price increases with the 6-month backlog, so it kind of made sense that those would just continue to tick up. So I have a little bit of a theory around here, which I'm not sure how much I believe in it, but it's at least interesting to think about. Is you had obviously the 100,000 hertz orders, and we didn't really have a whole lot of visibility into how many of those were filled
Hmm.
historically. And then we also had like your Model X, and I know there were several others who had like very low priced vehicles from
Yes.
like that were ordered 12 months or more ago.
Yeah. Yeah.
And
Yeah, my
so
model, just real quick, my Model X, we put a deposit on like over 2 years ago at like the original price of like 75,000, and now they're selling for like 110,000. So we still got the original price honored by us. So that's what he's talking about. Why some
yeah,
people are getting these late deliveries at the original prices. Anyway, go on, Matt.
so for ASP to have decreased as substantially as it did, to me, it seems like it would be hard for that to happen just as a result of product mix, like between the
Yeah.
China Model Y and X, or China Model Y versus like the European Model Y, for example, which obviously the European one has a higher sale price. So it's possible that this decrease was driven by, like, imagine you had, I don't know, 75,000 vehicles that were this, like ordered a year ago or so, something like that. So that could be like a big driver in the sequential, ASP decrease. So if that's true, and again, I'm not sure that it is, but then we could actually see a really drastic quarter over quarter increase in ASP in Q4. So I
Mm.
need to give that some more thought and try to figure out what I think is most likely. But it just seems very odd given the price increases that we've had and the backlog that would take some time to get through. That ASP would be decreasing. So I would expect in Q4 ASP to increase, but that'll be offset a little bit by the lower prices in China now. So a lot of
Yeah.
moving parts in that.
Was any of the analysts expecting the average sales price to decrease? Do you know?
Not
I
that
don't
I
think so.
saw.
I didn't
No,
see
no,
that
that
either. I
was
think everyone got that wrong. Yeah.
everyone got that wrong because the big commentary I saw from like all the headlines was that Tesla misses on revenue, which would,
Yeah.
when the deliveries are known, then that's got to be ASP being different. So I think that was a surprise across the board. And then
Yep.
the other really surprising thing to me was that the cost of goods sold increased so much as well. So you actually had lower price and higher cost. So that really kind of squeezed margins much more than we were expecting.
Hmm.
And so that accounts for a 17-cent variation to what we had modeled. And this was most surprising to me because it came out like a couple weeks before the end of the quarter, that Martin Viecha had spoken with some analysts and was talking about how they got their cost of goods sold down to, I think it was like $37,000 or something like that. So
Hmm.
I was assuming that was like a relatively current number, and perhaps it was for Shanghai and Fremont kind of combined. But I think once you add in Berlin and Austin, the impact was several $1,000s higher than that $37,000 figure. So that created a pretty big variance and squeezed the gross margin. So then the couple other things here I'll walk through quickly. The regulatory credits, those were almost $100 million lower than we'd been forecasting.
3 cents.
Energy.
Yep.
So that accounts for 3 cents decrease. Energy and services margin, that we were pretty close on that, but a little bit high.
Only
So
1
that
cent differential. Okay.
1 cent differential. And then this is the big one, the income tax rate. I've been assuming a 15% income tax rate.
Yeah.
And it came in under 9%. So it was like 8.5 or something like that. So that's kind of a non-sustainable
7 cents
benefit, I
differential.
think, which is 7 cents to the upside. So, and then the shares outstanding was a little bit lower than I'd been expecting. So as Tesla, and that accounts for 3 cents of outperformance versus our budget. So you add all those different variances up and you get to $1.05 versus the 132. But on that, the shares outstanding, this one's kind of interesting. I'm going to stop sharing my screen here, but it's so as Tesla has continued the stock-based compensation program and Elon's CEO performance award, the shares outstanding have really increased pretty significantly each quarter, but that rate of increase seems to have drastically slowed down, which is a really good thing because that limits dilution.
Yeah.
And if Tesla does authorize a buyback, it could actually reverse the other way, which is kind of crazy to think about. So then you could be going from, I'd been assuming kind of perpetual increase in shares outstanding to, fund stock-based compensation. And that, creates dilution, which compounds over time, which is pretty meaningful. So if you go out to like 2030 and you got like, oh, we got like $50 of earnings per share or something like that. Well, if you have a buyback, then, instead of diluting over time, it might be your $50 that assumed dilution might be like $70 if it's actually, undiluting. I don't know what the right word
What's
is
the
for
opposite
that.
word? Preclusive? I don't know. What's the opposite of die?
If you have a buyback,
Elutive?
if
I
shares
don't know.
outstanding are being retired, I guess.
Someone in the comments help us out. Yeah. All right.
Technically they're called treasury shares when the company buys them back,
Okay.
because they go and they kind of sit in the balance sheet.
Yeah.
That's just an interesting data point that I'm going to have to probably go back and lower my assumptions around to what extent shares outstanding increases over time. So that one's actually kind of optimistic, I think, in the long term.
Yeah, absolutely. So Rob Markovich says concentrating share. Yeah, concentrating, that maybe the opposite of diluting. Yeah. So that's interesting for modeling out in the future. Yeah, if they do the buyback. So yeah, I mean, I think it seems like our earnings, even though there's just those two big misses, without those two big misses, it would have been like very close to, I think it would have just been like 6 cents off or something, that without the two big misses, the average selling price and the cost of goods sold. So
Those are pretty important to get right, though. So
they are right. Yeah. Yeah.
I think it's fair to say we missed on those, but it's also surprised, like the logic of those moving the way that they did is surprising to me. Normally it seems like you and I have a much better kind of bead on what Tesla's doing in terms of like profitability and ASPs and COGS over time. Thanks, Farzad, for the supportive comments. Farzad's in the comments here saying, Matt, you suck. So it's surprising that like you're always going to miss a little bit on like the magnitude of the change, but it's very unusual to be off on the direction of the change. So that's surprising to me.
Yeah. Yeah. All right. Well, I mean, we have we'll do a lot of Q&A today. Let's touch on the Lemonade. We talk about Lemonade stock a lot. We had Daniel Schreiber, the CEO of Lemonade, on our podcast recently. Not our podcast, our interview, YouTube channel, interviewed a few weeks back, and that was a great interview. Yeah, I mean, they're a 1 billion market, or maybe 1.5 billion market cap company or something like that, versus Tesla's a 1 trillion or $650 billion market cap company now, or whatever. So it's a very different animal, 100 to 500 times bigger than one's 500 times bigger than the other one. So Lemonade is an insurtech play. We think it could grow substantially if it succeeds in disrupting insurance, and car insurance is a big thing. Anyway, they had a big partnership they announced with Chewy, which is like the biggest brand of web pet food, right? Chewy. Everyone goes to chewy.com to buy pet food, and they have like 20 million or 15 million customers or something, and buying pet food and other pet services, costumes for pets, all kinds of stuff.
It's
So
kind
they
of it's
have
kind of
some
like the Amazon
partnership.
for pets. Like you buy all your pet stuff through there, and it gets delivered.
Yeah.
And yeah.
Yeah. So what's this partnership, Matt? Tell us a little bit about what your understanding of the partnership is, or I could tell you, I guess, but
Yeah.
I was just seeing if
So
you read it or no.
yeah, no, it's a really interesting deal. So essentially, Lemonade entered into a warrant agreement where Chewy can essentially buy Lemonade shares at 1 cent per share. They're exercisable over time, and so it could account for up to it's like 4.99% dilution, something like that.
Mm,
So essentially, Chewy is getting almost free, pretty much free equity in Lemonade. And I was looking into the agreement, the warrant agreement, and it doesn't seem like there's any sort of um, like
performance
deliver the
metrics
performance metrics exactly. So
spelled
it's not like
out.
these are contingent on Chewy getting 5 million more Lemonade customers or something like that.
Yeah.
So I thought that was kind of interesting. The one protection Lemonade does have is that it appears to be cancelable
Hmm.
at will, as far as I can tell. Just
Okay.
in doing my first read through that agreement, so that's a little bit of protection. But generally speaking, it looks to me what the strategy is here is that like both companies have kind of like a non-cash transaction going on here. So Chewy obviously gets free equity essentially in Lemonade, and Lemonade is trying to essentially get free customer acquisition costs or customer acquisitions. And if you think about the kind of life cycle of the insurance customers that Lemonade has, they start with like the low end product, which is the pet insurance. That's like their lowest cost insurance product. And then as those customers age up, they add on home and auto and just things like that as they go from like a 20-year-old to a 30-year-old to a 40-year-old. So they're really trying to ramp up the customer acquisition on that kind of lowest cost part of the funnel. So it's kind of an interesting transaction in my mind. It's I was telling you yesterday, I couldn't tell whether I liked it or not. But
Yeah.
with Chewy, like you said, they've got over 20 million customers, and if even 5% or 10% of them, convert to Lemonade pet insurance, it could actually be like a really drastic catalyst for overall customer count for Lemonade going forward. So it all depends. Like that's the biggest question: is how many Chewy customers will convert to be Lemonade customers. But it could be very good news if it's if it's a meaningful percentage.
Yeah. Yeah. I think it's kind of an interesting partnership. I think it could be meaningful. Paper Bag Investor, if you don't follow him and you're interested in Lemonade, he's like a must follow. His YouTube videos. He did a great video last night on this, and he puts out some great tweets about some questions he has about it. We had interviewed Paper Bag Investor on our channel several months back, maybe a year ago now. I don't remember, but yeah, he did some great analysis on it too. I like the partnership potential here. I mean, Chewy's a much bigger company now. They're incentivized with Lemonade to make Lemonade successful, because then Chewy gets 5% of everything else Lemonade's successful at too, like car insurance, which is the big thing we're thinking about. And how many pet insurance companies start out with pet insurance and then move to, they get their own apartment, they get renter's insurance, they get their first car, they need car insurance, and they all do it through Lemonade. So to me, this is a huge funnel for
Yeah,
for Lemonade, and Lemonade knows best how their customers grow. They probably realize that their pet insurance customers are oftentimes young people just starting out with a first pet, and then they grow in their life and need other insurance types, and they've been seeing this for the last few years. And so this could be a huge funnel for Lemonade's future. I like it a lot. I mean, dilution 5%, it's not terrible compared to the pros, the possible benefits from this in my mind. And maybe one day it would be cool if they did some kind of if this partnership works out well, it'd be neat if they did some partnership with like Carvana for car insurance. I know Carvana is like heavily in bed or in ties with Root Insurance right now, but Root
yeah,
Insurance, if you look at their stock and their market cap, this we haven't done a deep dive on Root Insurance, but based on the stock price performance, the stock market thinks Root Insurance is going under pretty soon. So if that happens, then there's a vacancy. Maybe Lemonade has a partnership with Carvana for 5. I would love that too. Carvana is like the go-to place for buying used cars or for a lot of new people, and car insurance funnel right there. So this is an interesting business model. Let's see how it plays out for Lemonade and with the partnership with Chewy. So, yeah, I'm excited. I'm curious to see where this goes. There's a lot more upside potential than the downside to me.
Yeah. And to me, it seems like long term upside potential is really huge here. It's not the sort of thing that's going to be like, oh, all of a sudden Q4 earnings are awesome. Like it really is going to be a longer term benefit, I think. But I think that's okay.
Yeah, absolutely. I saw some people saying, or like, what's our reaction to the Twitter employees letter to Elon Musk? Have you seen this yet, Matt?
Yeah, it's pretty cringe. Have you seen it?
I haven't read it. I pulled it up just now. I was going to look at it because they were like, "What's your reaction?" We demand leadership to respect the platform and the workers who maintain it by committing to preserving the current headcount. Hmm. Yeah, lots of really
what
demand. Like, what are they gonna? It's very.
the
I mean,
sense
this
the
could just
sense
be
of
like
entitlement is just off the
five very.
charts.
Yeah, I mean, how many Twitter employees signed this? I mean, do they even say? Does it say? I don't even know. It says sincerely,
Um,
Twitter workers. It could just be like remember in SpaceX they had like five really woke SpaceX employees who wrote some letter to Elon. They
yeah,
all got like fired or something.
yeah,
So this
right.
could be like the five most woke Twitter employees banding together, writing this crazy letter to get publicity, and that's what I suspect. I don't know, unless there's some kind of if anyone in Twitter comments know how many people on Twitter signed this, I don't even think that's shown. If it's not shown, that means it's probably just very few people in my mind. So it's just, you'll see some weird stuff like this come out when you have a big company take over, especially, with all the media surrounding it.
It's just so tone deaf. Like you can't demand that your boss do something for you. Like that's not like it's just
It's not a
it's like
union. Yeah.
exactly. Like to me, this is just like the entire problem with Twitter's corporate culture is that they think that they're so important, that they need to be respected above all else, and it's just like I don't know. It
Yeah.
really
I mean, that's the
rubs
thing
me
about
the
living
wrong
in a free
way.
market. Do you want to live in China? Do you want to live in do you want to live in China or some other country where like, you're not allowed to have a free market and people everyone works for the government and those people make the most money that work for the government. And if you don't, you have to go get a government approval to make changes into any business thing, or do you want to work for a free market where, if you're talented and you're skilled, you can leave a company and go somewhere else, or the company can let go of you if they don't find value in you, and you have to find another company to prove your value to. I mean, that's the story of the American society up to this point. I just don't understand. There's a whole generation of people that I feel like have a hard time accepting that. So
Yeah. So somebody in the
anyway, the
comments
Twitter
was saying
letter.
that Elon's reply was, "If you're providing massive value to the company, you have nothing to fear." And like, of course, that's
Hmm.
the right answer. But how many of
Yeah,
those people are actually providing massive value? Well, if you look at their financial performance of Twitter, they're clearly not providing massive value. So like, yep, guess what?
yeah,
The axe is coming, and like on a personal level, I feel for everybody who's going to be let go, but
yeah.
I can't help but believe that's the right thing to do for the company to survive long term.
Yeah.
Um,
And guess what? If you do provide massive value and you get laid off anyway, so what? You provide massive value to some other company and do extremely well somewhere else. Prove them wrong. That's the
yeah,
mindset people should have, not play the victim. So, yeah, it's a psychological issue with the generation we have that they like to play the victim a lot, I think, or something. So, yeah, let's
it's
go
our
to
generation
Q&A.
too. How did our generation get so entitled? And
Your
why don't we feel
generation.
that way?
I'm 43. Maybe because
You're
I
like
grew
8
up.
years older than me. You could be my
A
brother.
big difference. A big difference. I played outside when I was a kid. I did
I
stuff
did
like that.
too. Come on.
Yeah, I don't.
I
Yeah,
played a lot of street hockey. That was my thing.
that's good. Well, maybe it's a mix then. Yeah, at a certain age, it's just. I guess I'm generalizing too much, but it just seemed like younger people are falling into this trap a lot more than maybe that's what our parents said about us when I was younger too, though. So
Yeah.
let's move on to Q&A. I guess we got about unless there's something else you wanted to say about that, Matt. Should we
No,
just
just
move to Q&A?
get off my lawn, all you young kids.
Yeah, okay. Yeah. From Cyril JBNN on Twitter, what are your thoughts on Tesla's plan to possibly buy back shares starting next year? Yeah, I mean, I think we've talked about this before. Last week we touched on this, and I'm not opposed to it. I don't think they need to, but I'm not opposed to it. And if they do it, great. Like, if they feel comfortable with their earnings potential, they already have 20 billion on their balance sheet. I think the key thing is, like, they're not necessarily spending like 10 billion of the current balance sheet they have. They're going to be spending like 10 billion of future cash flows coming in next year, for example, like, which might be well more than 10 million, right? So they're
Mhm.
still going to have a massive balance sheet they'll carry. But I'm okay with it. I think it's a good time, okay time to do it, as long as they think even in a recession, they don't have any issues with demand and such. Matt, you have any thoughts?
Yeah, I mean, you're right. We talked about this in the past. I fully support management's discretion. I think we even mentioned on the last one. It seems pretty clear that they've got availability to do like 5 to 10 billion of buyback, which is pretty much what Elon said on the call. So there's even a chance they could do it in Q4. Somebody was talking about that. Maybe it was Alexandra Mers. I can't remember, but somebody was saying that it's possible they could even start it in Q4. So I think they'll do it. It's they've got you got to think about the opportunity cost of this cash just sitting on your balance sheet. So, like, if they don't do a stock buyback, I'd rather they, at least buy treasuries or something that's like yielding 4% or something, because just sitting in cash is just a total waste of that capital that you have. So,
Yeah.
I hope they do something.
Yeah. I see Doge Nation said Emmett walked to school in the snow barefoot. I actually did walk to school in the snow many times. In my middle school was about a mile from our house, so we didn't get a bus, so we had to walk. But it was snowing sometimes, and it was cold, and it wasn't so bad. Not barefoot, but I can't see kids doing that these days. I mean, I guess there's a school near us. Kids are walking to school or biking to school, so it still happens. All right, next question from Brave. Why is Tesla Q3 adjusted EBITDA lower than in Q1, while Q3 free cash flow is significantly higher than in Q1? Sounds like one of those analogy questions on the SATs, but for math, accounting stuff. Matt, what do you think?
Yeah, so I haven't done a deep dive in this, but the short answer is going to be that your working capital increased over time or over the quarter. So your EBITDA is kind of like a measure of your current period's profitability. So it's on the income
Hmm.
statement. So it relates to like every single car you've sold in that quarter, but then your free cash flow moves over to the balance sheet and the statement of cash flows and says, okay, like, did you increase your payables over time? So, and Tesla did increase their payables in Q2 or in Q3. And when you increase your payables, that essentially is a source of free cash flow generation. So it's essentially this working capital. They're increasing their payables, maybe they're decreasing their receivables, things like that. So when you total up like inventory and accounts receivable, and then you back out your accounts payable and other short-term liabilities, the net effect of that is that you have a change in working capital in Q3, which was more significant than in Q1.
Good answer. From Andrew Bazile. How you doing, Andrew? Question. Some criticize Tesla's openness to buybacks, claiming that Tesla could spend more cash on productive pursuits, M&A, etc. Do you think Tesla is truly spending as much as it can efficiently? I do. I mean, I think Elon's mentioned it in the past, that you can only build so many factories at once efficiently. Like, they're just going to get too sloppy if they start throwing money everywhere. It's just going to create like a Pandora's box of expenses and barnacles to pay for. I think they're doing the right thing in terms of controlling how much capital they spend on new endeavors. They like to organically build their own stuff. We've seen there's very little acquisitions they want to do, like aside from some niche things like the Groman line or some unique technology they want to buy. A small company to get. So yeah, I don't think Tesla wants to buy like GM or Ford. That would just be a massive cash burn, if anything, in the long run. I mean, Matt, do you think they should be spending more on other endeavors, or do you think they're kind of already maximizing their capital deployment efficiency?
I do agree with your take on this, Emmett. Like, of course they could spend more cash, but can they spend cash on things that like actually have a positive ROI?
Mhm.
And I think that answer is probably no. And
Yeah.
like, you could also sign contracts and like do another gigafactory right now, but you have to have like the talent in place to like be ready to go and build that. So Elon was even talking about how their design team is now working on the Model 2 or the $25,000 version, whatever you want to call it. And it's like you've got this team of resources, that's capable of doing, one or two things, but you can't just say, I'm going to double your salary and I want you to do twice as much in the same time period. Like that just doesn't work. So I think they're doing a really good job of kind of walking the tightrope of not diluting their standards and not investing in things that they can't really deliver on, while still going after just about everything. So I've been impressed, and there might be one or two strategic acquisitions they do over time, like probably especially in the mining space. There's some stuff on the energy side that I'd be okay with them doing, but it seems pretty clear that they don't have the amount of free cash flow that they're generating. It's like there's not enough CapEx opportunities.
Yeah, and I think during the earnings call or something, there was some discussion about like a penny of a Tesla engineering effort is worth $1 billion of like GM engineering effort or something like that. And it's true, like the engineering R&D that Tesla does, even though they might have just like $100 million dedicated to this or $1 billion dedicated to that, that's worth more than like the $20 billion Volkswagen is throwing at something, or 50 billion GM is committed to doing something. It's not, the dollars are not equitable across Tesla versus the other companies. And the reason for that is because you just can't spend into new innovation. You have to have the talent, and Tesla has the human capital that no one else has. So if human capital was a separate currency, Tesla would be 100 times ahead of virtually any competitor in my mind. So
yeah, that is so true. I mean, just having worked at GM for a couple summers as an intern, just like the culture differences between companies are very, very real. And it's just,
and this is why Elon focuses so much on recruiting, and rightly so. And it's paying huge dividends, and it's going to continue to pay huge dividends. Like I think, people focus on dollars, right? But really it's all about the human capital at the end of the day. So, all right, let's go on to the next question here. From Doge Nation, what's up with Musk in Mexico? Any guesses? Yeah, I saw that report. He looks actually quite healthy, and he talked about fasting just on a tweet earlier. So I'm really glad Musk is looking healthy and doing some fasting and stuff. And I wouldn't be surprised if he's, they haven't announced their next gigafactory. Everyone expected them to make an official announcement in like Vancouver or somewhere in Canada, right? But that hasn't been officially announced yet. And so I wouldn't be surprised if they're still like, maybe Canada is still holding their, not giving Tesla everything they want in terms of negotiating favorable, less friction, moving capabilities to move forward with it, or whatever it is, maybe incentives or something. And so Elon's just, checking out other spots like Mexico and such, and maybe he'll go somewhere else if Canada isn't going to give them the, the exception for whatever the, red tape is they'd otherwise have to cut through, or whatever it is. So I feel like there's potentially some possibility Mexico's the next factory. What do you think, Matt?
Yeah, it's true. They very well could choose Mexico. I mean, that would, depending on which side I would presume they'd probably go on the Gulf side of Mexico. But if they do that, then that would open up a lot of kind of export channels to Europe, or to other parts of the world. And I think people don't realize there's actually a very large automotive manufacturing workforce in Mexico. A lot of companies have assembly plants in Mexico, and there's a lot of tier 2 suppliers there as well. Yeah, I mean, obviously the cost of labor is much lower, so that that very well could be. It wouldn't surprise me if they choose Mexico as the next gigafactory. But I don't know. It would be. I guess it would surprise me a little bit, but it's not completely out of the realm of possibility.
Yeah, it's new, and I'd support it. Yeah, I would. I mean, I think,
or maybe solar. Maybe they start ramping up gigafactories for solar products. Like we've got the giga New York, which is, I think by all accounts, a suboptimally designed factory. So maybe you kind of do like what you did going from Fremont to Shanghai, where you've got like all right, we learned a lot of lessons of how to make these products. So now let's redesign the Gigafactory to be way more efficient. So that's what they roll out in Shanghai. I think
Yeah.
they're learning a lot of things right now with the New York Gigafactory, and they say, okay, maybe we can do like all the stuff that they build there, the superchargers, maybe some more megapacks, obviously all the solar stuff. And that would be a good spot because you could actually deploy a lot of that in Latin America. I think just the solar resource is so much better, and if you can do it cost effectively, I think there'd be a more of a market for that.
Yeah, absolutely. All right, next question from Nikhil Serene on YouTube. Question, Matt and Emmett, any plans to open source your models so us retail and essentially can essentially reverse engineer to learn and build? I mean, I think we've been pretty good about open sourcing our thought process, and Matt has done screen shares of his model. And if you're a careful observer, you can kind of look at the screen shares and kind of work on your own model. And I know Ark Invest, they open source their actual model on GitHub or something, I think, right? So
Yeah.
that's probably a good place to start. I mean, Matt's models are pretty complex, and then you have to like spend a lot of time explaining it more or answering questions about it. But Ark Invest has put out the effort to actually open source the actual model, right, Matt?
Yeah, yeah, and actually, when I first put this model out in 2019, I did open source it. I put it on GitHub, so you
Oh,
could
okay.
find that older version of it somewhere on there. Um,
Yeah.
but it's changed. It's changed a lot over time because so much of the business has changed. But I mean,
Yeah.
it's not that complicated of a model. I mean, this is actually a very kind of stripped down, simplified version. We have the much more detailed kind of discounted cash flow valuation model, which that would be much harder to open source just because it's very complicated. But I think this is fairly straightforward. I mean, most of the value I think in what we go into here into this model with is not the model itself. It's the thought process of how do these variables change over time. That's what I think is more valuable than the nuts and bolts of the actual calculations.
Yeah. Next question from Carl Branco on YouTube. Isn't treasury share a better long-term value to the company versus just holding cash?
So treasury share refers to buyback. So if Tesla were to buy back the stock, then those shares that Tesla would hold would be called treasury shares. So yeah, I think so. I mean, if I mean, Emmet, if you believe that Tesla's going to be the largest company in the world, and I certainly do,
Yep.
then you just say, okay, at what point does that happen? And so, what's the kind of compound return, the compound annual growth rate? And I would seem to me that that value accrual is going to be a lot more meaningful than just holding your shares in cash and having them inflate away.
Absolutely. Let's do the next question from Rio Riggs. When should we expect the $25,000 Tesla? 2024, 2025, 2026? I know they talked about the next generation on the last earnings call, and I think they referred it to be like cost less to produce or something. But I'm not so sure that means they're going to sell a $25,000 Tesla to the public. I know a lot of people are saying, and it could mean that, but it could just mean the robotaxi platform that they're building out to. Maybe it'll cost them less to build, but they'll lease it out instead of sell them, and you put them in a Tesla robotaxi fleet, or maybe you can buy them, but you have to pay $50 or $100,000 for them because they're full self-driving, level 5 capable. So I'm not so sure they're going to actually sell a $25,000 consumer car ever. To be honest, I'm not sure yet. I know there's people are interpreting the comments that way from the earnings call, but I'm not interpreting it that way yet. It's possible. What do you think, Matt? Is there something in the comments of the Twitter of the earnings call that you thought meant that for sure they're going to sell a
Yeah.
25,000 consumer car?
Well, so Elon liked a tweet, and I was trying to find it here.
Hmm.
So
Maybe in
okay, so
China. Maybe the
here it
China design
is.
studio created in China. I could see that for sure. But anyway, go on.
So Holmars he had two tweets. He said the new robotaxi is smaller than the 3 and Y and will cost half. It will exceed production of all other vehicles combined. And then he said, "I see the $25,000 car is now the robotaxi." So and
Mhm.
Elon liked that. So to me, that seemed like a pretty strong indication that, okay, they're just trying to come up with like the most cost efficient way to get your, like your cost per mile down as low as possible. So
Hmm.
I think if I can interpret the comments on the earnings call, they're targeting something that costs maybe $20,000 to build or so, something like that.
They
There's
could
no way they're
technically
going to,
sell for 25,000 if they had to, or something.
which there's no way they're going to do, especially
That's what I
like
think. Yeah.
the robo taxi will be bundled with FSD. I think there's
Yes.
kind of no way around that. But so then
Yeah.
let's assume it is a $25,000 car, but Tesla charges 40,000 for like FSD or something at that point. If it
Yeah, you
truly is
have to
like a
pay
robo
for it.
taxi.
Otherwise, they wouldn't sell it to you. If there's a million people waiting to pay for it with the full self-driving, they're not going to sell it to the million people first
Yeah.
that don't want the robo-taxi
So
capability.
then it's you have a $65,000 car, call it something like that, but which can generate cash flow for you and generate you a very strong positive, cash flow return. So
Mhm.
to me, like it seems like that's what they're targeting. Elon's based on Elon's comments, I think he's very confident that they're actually going to like solve autonomy this year. I don't think it's going to be ready for robotaxi at all, like even by mid next year, but maybe by 2024, 2025 it'll be safe enough. And I think that's like maybe 25 or 26. This like robo taxi vehicle will actually be in like
Produced in
wide
masses.
produced in mass. Yeah. And that's when it would
Yeah.
go. And so then you think about it and it's like, okay, you can buy a Model Y for 65,000, or you can buy, the robo taxi for 65,000 and it'll generate, I don't know, $1,000 a month or something like that. Well,
Yeah.
that's a much more impressive value proposition than the Model Y. So that's how you can still at like ridiculously high margins. I mean, think about the margins at that point. You're talking about like 75% margins, if I've done my math right on that,
Yeah.
gross margins, which is just ridiculous. And then you get recurring revenue from the Tesla network on top of that. It really is absolutely nutty margin potential if they can actually get the tech to work.
Yeah. Absolutely. Next question. Let's see here. From Farzad. How you doing, Farzad? When's Elon's new compensation plan and master plan part 3? Yeah, that's what we're all wondering. When's this master plan part 3 going to be unveiled, right? I mean, he's thinks deeply about this stuff and puts a lot of effort or thought into it before I think he publishes it. Um, so there's no confirmation of a new compensation plan. I know we're all speculating. I mean, why do we just are we just assuming there's going to be a new compensation plan because uh, he's always had one, or was there something that I'm missing that Elon or someone confirmed, like investor relations, that we're working on it? Because I know there was a denial of it at one point, like
Yeah,
few
that
quarters
was
ago or something.
a
Someone
couple.
asked, and he's
Yeah,
like, "No, there's no new compensation plan."
yep. Yeah, at that point it was,
So is there
we're
something
not
new
having
that
any
makes us all
conversation.
think? Yeah,
Not
is
that
there
I've
something
heard.
new that makes us think there's one? I haven't heard that either. I'm not so sure there will be. I mean, I think there should be, to be honest. I would be happy if there was. It would help align Elon's incentives further. And he should be getting compensation for everything he's doing to create the most valuable company in the world, right? So I think there should be. I just don't know if there really is going to be one. I mean, there was so much there was a lot of bad press around how much money or how much wealth he generated for himself because of meeting this compensation. Like, do you remember Bernie Sanders and Elizabeth Warren? Instead of complaining about Halloween candy prices, they were complaining about Elon Musk and and his getting X% of Tesla worth X billion dollars, another billionaire. And that was
It's
because of the
funny.
compensation. Yeah.
Yeah, and
So
it's funny how they go quiet when the stock market's down. Nobody talks about like a wealth tax when when the market's down
yeah,
50%. So it's
yeah,
just it kind of shows you how disingenuous those comments are. But
yeah.
yeah, I agree with you. I'm skeptical that there will even be a new compensation plan. I'm okay with it if there is, but like from Elon's perspective, he already owns such a huge percentage of the company, and I don't know. I mean, you could presumably do something like that again, but I'm not sure the market would. I don't think the market would look at it favorably if they did introduce that.
Yeah. Yeah, people will be like, "What? Elon's already the richest person in the world. Why are you going to give him this compensation that would make him a trillionaire? That's out. That's
Yeah.
what ridiculous. That should never happen." Imagine the outcries
Oh yeah,
publicly of
for
all the
sure.
socialists about that, right? So, all right, let's go to the last question. One more question. It's already an hour in. All right, here we go. Joseph Mizarek from YouTube. Question: any thoughts on Kathy Wood getting a shout out on the earnings call? Good idea for Elon to do that. Yeah, I think that's great. I mean, I had a really controversial tweet I put out recent, like maybe a couple months ago. I was like, controversial take. I think Kathy Wood, it would be amazing if Kathy Wood was the, next Fed chairman eventually after Powell got out. And like so many people like hated on that comment, and like I was made fun. Like some people thought it was good, but I think she's an incredible macroeconomist. I think she sees things very clearly compared to Powell and the current Fed, who's so late on everything. I think Kathy Wood uh, can separate the signal from the noise in the macro market better than any other macroeconomist really I've seen. So I agree with Elon. She should get shout outs. She should, you know, be part of the conversation when considering macro economic policy. What do you think, Matt?
Yeah, I mean, there's your comment on the Fed, and I think even Drew Dixon chimed in on that and said not going to happen or something like that.
Yeah.
Which I don't know. Like I agree. I don't think that's going to happen, but I do think
No, it
it
won't
would be
happen.
awesome, like for somebody who's actually focused on innovation and looking at forward-looking signals to get involved.
Yeah.
Even if she wasn't the chair, but just like a voice or someone like one of her analysts. Her analysts don't have as much economic background as she does.
Yeah.
But yeah, so I think that'd be good. I think Elon, like in terms of the shout out on the earnings call, like he knows that she's kind of going through a very rough patch right now, as are a lot of growth investors, but are
Yeah.
probably more so than anyone. So I think trying to support her take on things after how supportive she's been of Tesla when Tesla was in a hard spot, I think one, he agrees with her, and I think two, he's just wants to help her in time when she's not doing so well. So I don't know. That's
Yeah.
kind of my thoughts on that.
Yeah. No, I think he highly respects her thinking on this. He's, obviously talked with her on interviews and her team. And, for Elon to respect your thinking process about something, you have to be pretty good at it. He's not gonna,
Yeah.
say stuff like that if you're not good at it. So all right, well, that's it for today. In this week's episode, we'll be back next week, and as soon as we end this, it'll be in our YouTube channel. And yeah, we have a great energy discussion, roundtable discussion we did yesterday. We recorded yesterday with two very smart individuals. We'll probably release that later today or tomorrow on our YouTube channel. It's about an hour long. Matt and the two of them kind of nerd out on a lot of stuff. Once in a while, I try to understand what they're talking about and ask a layman question, but it's really interesting. A lot about the Inflation Reduction Act, and we're probably gonna have a part two with them in Q1, after we see kind of initial results of Inflation Reduction Act playing out for Tesla and their financials. So yeah, exciting, and we'll see what happens. The next week or so with the Twitter deal and Tesla and Elon selling shares or not. So I'm excited for that Twitter overhang to be done with, and for the Tesla stock price to continue. I'm very excited for what Twitter turns into in the future. And a year or two from now, we might just be solely on Twitter. Who knows? So, all right, guys, good chatting.
Thanks for watching episode 69. What a
Yeah.
milestone.